Hello once again and welcome to this week's Realty Talk show. Well, today Bushy Martin questions a core value. You see, when he was being brought up, he was brought up to believe that you should go through life with one wife and one bank. But he's now questioning that belief. Look, I think realistically you can guess which one is in question. Bushy is joined today by Jason Back, who is the founder of Broker Essentials, to revisit the question of why use a broker over a bank. After all, property performance, as we've told you in the past, is a game of finance. Given the constant dynamic changes that influence property conditions and movements, it's important to build a resilient property portfolio. Rasti from Get Rare Property joins Bushy to discuss what that actually means and how to achieve it. But just before we start, I want to thank our supporters and content partners Realty.com.au, BMT Tax Depreciation, Know How Property Finance, Get Rare Property and Apiro Marketing. And if this is your first time with us, a big welcome. You're going to find us on all podcast players and through the Southern Cross Oz Stereo Network. If you like the show, please hit the subscribe button and help us to continue to bring you the best guests every week. Don't forget too that you can join the conversation anytime on Facebook at the Property Hub Collective. We'll be back in just a moment.
Property deductions can save you thousands of dollars each year. To make sure you maximise deductions, you need to work with the most experienced quantity surveyor in the country. BMT Tax Depreciation is the leading specialist in the industry. They've completed over 700,000 tax deduction schedules for residential investment and commercial properties Australia-wide. BMT guarantee to find double your fee in the first full financial year deductions. Call BMT on 1300 728 726 today for an obligation-free quote. Realty Talk and your host, Bushy Martin.
Now, as a born and bred country boy where loyalty was ingrained as a core value, I was actually brought up to believe that you should go through life with one wife and one bank. Now, while the first still holds true, as a property investor, I was quick to discover that the one bank approach came with significant limitations and costly outcomes. But as naive ignorance can be bliss because you just don't know what you don't know, and property performance is definitely a game of finance, I thought it opportune to revisit the old key question of why use a broker over a bank. And I needed to clear my obvious conflict of interest on this subject, as I learned early in my investment journey that a savage mortgage broker can make a world of difference for your capacity, your cost and your risk, which is why we founded our team at Know How Property Finance. So to put some more objective balance back into the age-old argument of why you would use a broker over a bank, we're joined by the founder of Broker Essentials, Jason Back, a mortgage broking business coach and keynote speaker who's a repeated winner of the Australian Mentor and Thought Leader of the Year. So welcome back to Realty Talk, Jason.
Bushy, it is so wonderful to be here and a topic that I'm super passionate about. So yeah, I'm excited to jump right in.
Yeah, we're going to have some fun with it. Now, I guess just to set the scene then, Jason, what are the trends and stats in borrowers using banks and brokers, and what are your thoughts on the changes you're seeing in this area?
It's a really fascinating time. In fact, it was only a week or so ago that our industry had actually hit its all-time highs. So we're about 71.8%, I believe, of flow at the moment. So that's brokers being used over traditional direct-to-bank products. So there's been this sort of continual pouring out over the last few years of clients going directly to the bank to establish their facilities, now using the broker market of around about 19,500 brokers. So we're growing steadily, but I think we're peaking out around about just under 20,000.
Yeah, okay. Well, that's a pretty big number, and I was going to ask you on that. So how does that compare with the number of banks and lenders that are available? And if we look at that overall mix of banks and brokers, what sort of changes and trends are you seeing occurring in the lending space?
Look, like anything, there's always a sort of a flight to where the money is in the economy. And over the last decade, we've seen, obviously huge growth through, pre and post COVID. There's been sort of trends going in a low interest rate environment where everyone's out to borrow as much as they possibly can. The property markets have obviously been doing incredibly well and been very resilient through some changing times. But in our industry, we generate around about $4.2 billion a year in revenue. So people want a piece of that pie, and it means that there's been a lot more banks enter the fray. It's not just what we would call the typical big four or the big five if you include Macquarie these days. You're now starting to see literally hundreds of banks, whether they are what we would call first tier, being sort of the big four, big five, or the second or third tier as we go down into, from the MEs to the Ubanks to the Bendigo banks, the local banks, the small regional banks, but now we're in the neobank phase as well. So we are starting to see a lot more licenses being issued. They're not always ADIs, but they are certainly. We're certainly seeing a lot more competition where I would probably, if I'm looking at a bank these days direct, I do ask myself the question generally of who owns it, how did it start up, where did it come from? But the competition is huge. We know why. There's circa 6.5 million mortgages in this country, around about 3.5, 4 million mortgage holders. So a very a small market, but a very hotly contested market. And that's drawing in, obviously, a lot of competition, a lot of interest, and it's exciting times ahead.
Absolutely is. Well, I guess just to draw the key distinctions, what do you see as the key differences as well as the pros and cons of using a broker versus going direct to a bank to secure a loan?
Yeah, Bushy, I think you started off the session today with just actually quite nostalgic. I'm a child of the 70s. I actually been in the banking industry for over 30 plus years now and started my career in banking. So I remember the branch manager that I used to work for back in St. George's Terrace in Perth, and the 35, 40-degree days, and he had his suit and blazer and his tie on no matter what. And I love the nostalgic feeling of going to someone that does, that I know, like, and trust, and doing business with someone that I feel really safe with. And I think over the last 20 or 30 years, there's been this change to obviously speed and convenience. We've seen everything from going from the local bank on every corner almost to an ATM on almost every corner, and those things are changing. We've seen branch closures being a very heavily discussed topic in the nation over the last decade. ATMs are now disappearing. The death of cash is upon us potentially. So we have seen this move away to what I think to a degree is almost not a con, but it's pretty close, where we're being told that it's all about speed and it's all about user convenience, when in reality it's all really about the bottom line, reducing sunk costs, very expensive branches, and land and the like, and those things that the banks don't really want to be held and responsible for anymore. Telling the consumer that, well, if you come direct, it's much easier, it's much more convenient. I think it's much easier and convenient for them, maybe not so much for the consumer. I think I'd like to think like you, Bushy, I'll be one of the experts in this country about being able to obtain my own finance. But in buying my own place, or multiple properties, but this one that I live in, our dream home we bought last year, the first thing that I did, was text my broker and say, hey, we've fallen in love, we want this, sort this out, make it happen. And 7 days later with the finance clause, we were approved and our dreams came true. So yes, there's been a big shift. Yes, there's lots of sort of variable factors that go in and why and how we obtain finance. But I don't think that there has been this shift away from wanting someone that we can deal with, that knows us, that knows our pain, that knows our pleasures, that knows our desires and where we want to do and what we want to do in life, and goes away and finds the solution to the problem that we have. So, I think the trend towards broker is an interesting one. I think we'll continue to see value in what we would say complexity. So as client situations get more complex, the need for having an expert won't go away. Now, that being said, there is still a degree of the population out there that have very simplistic needs, and there'll be direct-to-market products and digitized products that will be able to support and assist them as well. But that being said, the beauty of broker providing choice, and with the legislation that surrounds the broking industry under best interest duty, I still love that legislation. I love the point of differentiation that we are legally required to operate in the best interest of the client. As much as it might be more compliance and more paperwork required, I just love that sort of flight to safety, or that safe harbor around that legislation. So interesting times.
Very interesting times. And I think you've drawn attention to something that a lot of people haven't got their head around, and that is that while what's called in industry the BID, or the best interest duty compliance requirements, might be perceived by the broking fraternity to add extra process and procedure, what it's actually doing for the broker segment is drawing a very distinct line between what brokers are doing in terms of truly looking after the best interests of their clients versus the banks who are more interested in their own back pocket. So it's a point of difference that is a really important one, I think, and I'm glad you mentioned that. But I guess, given that there's, as you mentioned, 20-odd thousand brokers out there now, given that you work with a lot of them and all of the major ones across the country, what do you think separates the best mortgage brokerages from the rest? And I want to look at that both in terms of the current now and potentially in the future.
Look, I think there's a couple of things in there. One is, just like any relationship, it's a two-way street. So there needs to be a value exchange from both parties. We want a commitment from our clients to invest in us and be committed to the process. And obviously from a client's perspective, they want someone that's knowledgeable, understands their needs, and can deliver a solution in an agreed timely fashion. I think where we sort of sit at the moment in how you would go about finding a broker, because if you go back 5 or 6 years when our market share was about 40%, people were starting to ask the question of, should I use a broker over a bank? Now the question's becoming, which broker do I choose? So lots of Google searches on find broker near me, or looking at testimonials and Google reviews and all those sort of things is fine. But I would probably start by how I would go about choosing a broker would be asking better questions. So talking a little bit more about, where their experience lies, what they're passionate about, what their own personal experiences have been around, not just property ownership, but things like debt reduction strategies and the like. Talk to them about what's important to them about an ongoing relationship. So I like to think of our industry less like a McDonald's drive-through experience and more like going to Nobu or Attica or something where it's a 10-course degustation that, we're not just here for the basic fulfillment of getting a loan. We're really here as an industry to position our value as talking about debt structure and strategy. So not just getting the loan, but also working with the clients to help them create wealth. Or for a lot of cases, it might just be simple debt reduction strategies, not just how much you can borrow, but how do we get this thing paid off sooner? So if the big advice I'd give to any investors or people out there seeking to find a broker would be to ask them better questions, talk to them about the service proposition. What does it look like on an ongoing basis to work together to work towards that mutual benefit? So that's sort of where we stand today. But the broker of the future, there's been some really interesting studies done recently about consumer behavior and what we're seeing in that space. You'll find that the consumer is telling us, yes, they want a digitized process. So they're very comfortable now filling out fact finds digitally or returning documents rather than having to do wet signatures. I got asked for a wet signature on a change of address from a bank yesterday, and I was shocked. Now, that being said, who has printers at home these days? Not many people, right?
Not many.
So,
yeah.
The future now looks a lot more comfortable where the client's comfortable with the digitized process in most of the case. But what they are still looking for is that hybrid experience around, we may never physically meet face-to-face, but we'll have great virtual interactions. The time and place of my choosing may now be, I said via Zoom rather than going to a corner store or coming out to a coffee shop or meeting a client face-to-face. But these hybrid sort of positions obviously exist. And what we're still looking for is, I still want that interaction. I still want to be able to talk to someone. I still want to be able to have some degree of connection, because there still is, unfortunately, a high level of distrust for the banking sector. And big, shout out to our banking colleagues and those that we do work with, is that these companies do a lot of good, a lot of philanthropic work. They hire tens and tens of thousands of people. At the whole, most of them are trying to do the right thing, but we've had decades now of some not necessarily great behaviors and, royal commissions and the like, but most people at the bank are just trying to do the right thing. So what we've got to try and work out is, we've actually got to talk to the consumer more about what's actually important to them. And that's sort of the key question here. How do you want to be served? What's important to you? What do you want on an ongoing basis? Find a broker that's curious about you. Ask better questions about the service proposition, their qualifications and experience. And I think you'll have a relationship that you can build nicely and over time.
Yeah, beautifully said. And I think you've touched on some really key points. I mean, your analogy around the trust and the relationship piece, I think, is key. I mean, I use a slightly different approach. I talk about, one night stands versus marriages, because that's how you really got to focus on them. And sadly, in the finance industry generally, there's a lot of seagulls who fly in and poop and then fly out, and you never hear from them again. So really getting clear on what's important to you as an individual and what do you need from that experience, and making sure you're engaging with someone who has a similar level of care around that is really key to build that relationship, I think. So look, we've only really just touched the surface, Jason. I always love gaining your insights, but I really want to thank you for reinforcing the importance of who and how to best secure a property loan, and giving a bit of a personal shameless plug. If anyone would like to explore your lending options further, feel free to reach out to our senior broker team at knowhowproperty.com.au, or if you want a review of your personal property portfolio and your finance structure, you can do that with me personally by booking an appointment on our website as a personal solution session. But more importantly, if you are a mortgage broker looking to deliver sustainable growth and take things to the next leading edge level in order to better serve property borrowers, I really suggest you do yourself and your business a massive favour, like we do personally, by reaching out to you, Jason, at brokeressentials.com.au, by following the links in the show notes. So again, thanks for your time. And well, I really appreciate you coming on, mate. The fact that you're dealing with the leading edge players in the industry on a constant basis means that you've got knowledge and awareness that pretty much no one else in the industry actually has. So getting you on board to share that is very beneficial to us all. So I just really want to thank you for your words of wisdom and joining us on the show today.
No problem at all.
Successful property investment is a game of finance. Do you have the right team and the right game plan? Realty Talk is brought to you by Know How Property. More than mortgage brokers, Bushy Martin and his team of investment architects set you up with a sustainable strategy structured to lower your costs, tax, risk and stress while increasing your capacity for growth. Know How has helped over 1,900 homeowners and investors secure more than $800 million in property wealth. So get set to live more, work less, and live your legacy. Want to know how to invest in your freedom? Visit knowhowproperty.com.au.
This is Realty Talk, powered by realty.com.au.
Now, like the old saying goes, there's 1,000 ways to skin a cat when it comes to building a property portfolio, depending on a whole host of interrelated personal and property factors. But given the constant dynamic changes that influence property conditions and movements, it's really important to build a resilient property portfolio. But what does this actually mean, and how do you achieve it? Well, to share his wealth of wisdom on this important topic on the strength of his great book, The Property Wealth Blueprint, we're joined again by Rasti Vaibhav, the founder of leading national buyers agency, Get Rare Properties. So welcome back to the Property Hub, Rasti.
Thank you so much, Bushy. Really appreciate it.
Rasti, this is a subject that's near and dear to both of our hearts, so I'm really looking forward to this one. But sort of to kick things off, why is building a resilient property portfolio crucial in today's market?
Look, as you said, it's very dear to our hearts. First of all, I'll really talk about the portfolio part of it. Then we can talk about the resilience, because it's a question by itself is two parts, resilient portfolio. So let's talk about portfolio. First of all, why portfolio? Because one or two properties will not make it. We are working so hard as an average Australian, and the whole thing is about trading time for money. Yes, we go to work, we get paid, maybe proportional to the skill level that we bring. But at the end of the day, we get paid for the time that we're spending. Now that's called active income, but of course it's not enough, because once we stop working, it ceases to come through. So we really need to be thinking about our retirement funds that is basically nothing but a passive income, which means that the income that can keep coming. The question I typically get is like, how much money do I need to have to get the retirement? I would say the other way around. It's like, when do you want to retire and how you would like to get to that level so that it can define your lifestyle. And sometimes it's not really about your end goal, it's about your journey as well, because who wouldn't like to have that passive income even when we have the choice to go to work today? So it's a freedom of choice we are really talking about. So portfolio really does that. It over the period of time, if you build the right portfolio, some portfolio which can really weather the ups and downs because it's so cyclical, if we can build that and sustain it, manage the cash flow or the pain around it, and at the end of the day, if you can get that passive income coming out of it, nothing beats that. Now, why we should be thinking about a portfolio? Because instead of somebody saying that, okay, now all I need is a $3 million portfolio, one can go and buy a property of $3 million. But it might not make sense because that's not resilient, because it can, the fortunes of that individual will go up and down with the price movements of that property. On the other hand, one can think of dividing that asset value into few properties. Could be 3, could be 4, could be 5. So we're really talking about multiple properties. Now, the benefit of going and building a portfolio and trying to make it as resilient as possible, we really need to be thinking about buying it in multiple markets, because there's no such thing called Australian property market. We have markets within the markets. It's a heterogeneous market. What it does, it's actually a bonus. It's a boost for property investors, educated investors, because they can really choose. In any market, there might be a market which is actually struggling, but at the same time, there might be a market which is actually flourishing from there. So lots of people really try to look at where the interest rate is going, what the sentiment is doing. But as we all know, that it's about the time in the market and buying it well that really defines it. So when we are thinking about portfolio, we can choose to buy few properties. The benefits are that it can be a very balanced portfolio. Rather than tilting towards one side of cash flow or the other side of capital growth, you can really have a portfolio which has few of both at the both ends, so that as a combination, as a portfolio, it's more risk-averse portfolio. It moves a lot more smoother. And one of the other benefits is that we don't really have to wait for all the money to buy a big property. As and when we can afford to buy our property, based on the risk profile, we can choose to get in the market. And it's the time in the market that matters, because if you buy it well, the equity growth of the first one will allow us to buy the next one. Hence, not only it's great to have, but it actually makes it easy to build up one property at a time.
Yeah, extremely well said. Now, I mentioned your great book, The Blueprint, in the intro. I'd love for you just to explain the Get Rare model and its applicability to constructing a resilient property portfolio then.
Sure. So first of all, let's talk about like how do we go about building portfolio. It's like, let's buy a first property, let it grow. Let's buy a second property, let it go, then come to the third one. That's what we assume things will happen. It's analogous to saying, let's build a 6-story building. What we should do, let's put first floor today, come back tomorrow, or whenever, put the second floor. But we know that's not the way it works. As an architect, as both myself and yourself, we know it doesn't, we don't put a building like that. We need to really come up with a plan, a blueprint of how the building looks like, what the structure looks like, what are the structural walls and where the lift lobby is, and more importantly, lay down the right foundation and all the drawings first on paper before we jump on doing something like that. So as many people think that, oh, now we have to think of building a portfolio, let's go and jump into one property, buy it, and come back later on. So the whole idea is that portfolio is like, now you have to start from, we've been twice actually, when we choose to do anything. One in our mind, when we can see it all the way through, visualization, and then we go and execute it. So that's what really we are really talking about in the book, the Property Wealth Blueprint. And as the title gives away, it's like the blueprint to build wealth in properties. And effectively, we're chasing wealth, not even the portfolio, because anyone might be able to build a portfolio, but if the loan or the outstanding amount against it is huge, doesn't really does the job over there. So it's about the wealth or the equity in the portfolio that we should be looking at. So coming back to the question, like what we are really talking about in the book is a very, I really live by that model. It's called Get Rare model. It has 4 stages over there. What we're talking about, namely 4 stages: acquire, grow, consolidate, and enjoy. So I'll explain them very quickly. Acquire means that you build your portfolio one property at a time. And again, there's a model to it, which if you allow, I'll probably speak about that as well. So what we are doing is like we build our base portfolio, then we give it time to let it grow. So once what we're looking at, we are managing the cash flow, we are managing the risks around it. It should be stable portfolio. It should be a lot more resilient portfolio, because as the market moves, we don't really want to lose our sleep. So it's so important, the acquisition of the properties that we are making, which should be more for the long term, not just for the short term speculative investing over there. So we build the portfolio, acquire the portfolio, we sit on it, we let it grow. When it grows in value, we are really looking at monitoring the equity, which is the difference between the portfolio value minus the outstanding loan amount. Once we have achieved that equity of our desired level, then we can really jump into the next stage, which is consolidation. Because at the end of the day, in our retirement, when we are really talking about the passive income, we don't really want to live with that outstanding loan against it. We really want to be free of any worries whatsoever. So what we're really saying is that when the equity has been built up, we have an exit strategy, one property at a time, just to make sure that we're not really paying too much of capital gain tax on every property in 1 year itself. So we can really, just like we are buying one property at a time, we are selling one property at a time at that stage. And once we have sold few properties to pay off the debt on the other portion of the portfolio, what we are actually left with is the incumbent, without any debt properties which are out there, which are probably rented and giving a passive income. Yeah. So that passive income that we are getting is more for us to, I guess, consume rather than paying the mortgage. So that is the 4 stages. Again, very quickly, acquire the portfolio, let it grow, consolidate and enjoy. And as we can all appreciate, the first stage is the most critical one.
Yeah, I love that, and you are in unison. And maybe it is that architectural background where we start with the end in mind. We get very clear on how that looks, but we don't just build it ad hoc and make it up as we go along. As you well pointed out, it's getting really clear on what type of property and the balance of the properties in terms of capital growth and cash flow over time to achieve that end goal. So love you sharing that with us. If we sort of looked at a couple of key aspects, what are 2 critical considerations that every investor should keep in mind with this then, Rasti?
Sure. So that is more around how do we go about acquiring the portfolio, right? So when we have to acquire the portfolio, we have to be really clear what we are trying to achieve, just like as you said, clarity of the end goal. And to work it out, what we're really saying is that we need to have the clear strategy on how do we go about building it, or even when to know when to stop as well, because we don't want to overshoot ourselves and put ourselves in a different risk profile altogether. So what we're really saying is that the strategy, which is encompasses of the other model, which again, which actually is called Get Rare, which is basically RARE, R for review, A for aim, R for raise, E for enjoy. And as you suspected, we should always start with the end goal. So start with the end goal, which is the enjoy. Like what sort of passive income do we really require from this portfolio? And then, so now that defines our end goal. We need to be clear where we are starting, what our base numbers are, and also the motivation around it. So why do we need that much money in our retirement? What's our intrinsic why behind it? What's our belief that if we get this tomorrow, what will we be doing? Because for me, that's really serves as the motivation, because it's not really an easy journey. If it was as easy as for anyone, then everyone will be doing it. It's just the clarity about that, yes, there might be some short-term sacrifices like saving for your first deposit, but unless you can see the long-term picture, the benefits out of it, that pain might seem a pain. Otherwise, it looks like it's a sweet thing that we are doing, we're saving for our tomorrow kind of a thing.
Yeah.
So coming back, what we're really saying is that let's have a clarity of the end goal. Let's assess our why. Let's assess our motivation. Let's visualize the end goal. Let's build a belief around it. And now, just like on a GPS, we know our starting point, we know our end goal. Let's respect the parameters that actually are our limitations or our constraints or our preferences. Say, for example, like borrowing power. We are building this portfolio in a multi-years. So what is the sort of savings plan we have? Yeah. What sort of leverage we can, as a borrowing power? But then also, what's your risk profile? Are we actually happy to put all the money in this asset base, or we need to diversify among different asset classes? So based on all of that, we need to have a strategy around it to acquire that portfolio. So that is one element to me, that strategy, that is like a blueprint to build a tower that we discussed. And then we really need the skills of someone who would just go and put the scaffolding and put the wall and the roof. So effectively, there are 2 elements to it: the strategy, which is more of a paperwork, the belief, the clarity of the vision, and how do we go about achieving it. And then the second part of it is actually execution. And in this reference, we are really talking about due diligence.
Yeah.
And I know it might be too much for someone to even think about, like, how do I go about doing it? So if I have to summarize even those two elements, I would say all we need is the right team who can go and help you to do all of that.
Yeah, beautifully said. And it's as you and I have said many times in the past, success in property is an elite team sport. And the investor needs to surround themselves with people better than themselves in each and every position in the exercise to be able to then manage the managers and let the experts actually do the delivery while making sure that they are kicking goals that the investor's actually trying to achieve. So beautifully said. The obvious question to end all this great discussion, Rusty, is how do you suggest we all start?
No, great question. So I would think there are the three elements to it. The first one being the education, because it's the best investment is in yourself, as like understanding how it works, what can be achieved, and the way to do it is like listen to multiple podcasts, different views, different strategies, read books out there, mingle with others, and that is probably going to the second part is the network, because at the end of the day, your network is your net worth, and your net worth is your network. So being surrounded by those people who have done it successfully. Because we don't really have to learn from our own mistakes when we can learn from the experience of others. So the books, that podcast, that networking will actually help us to really, learn and grow. And that's exactly how I've done myself. And then the third element would be to maybe if you are really running short on time and you don't really have the time to do all of that, I've talked about the education and the strategy and due diligence. The best shortcut is to go and look for a coach or look for a team who can help you visualize it, not just by really making you visualize it, but rather showing by example what they have done for themselves, what their strategy has been, what were the pitfalls. And but if you go to a professional who has done it successfully, they might have built some processes, which are the tested processes, which have worked for them and also for the people they're serving. So to me, it's as simple as education and surrounding with the people. And if you're really looking for some shortcuts, maybe look for the people who have been doing this professionally.
Yeah, beautifully said. Well, look, again, I want to thank you for reinforcing the critical importance of building a resilient property portfolio, Rusty. And for those that really resonate with your message and want to learn more, make sure everyone grabs a free copy of Rusty's great book by clicking the link in the show notes or by going to getrare.com.au/the Property Wealth Blueprint. So thanks again for opening your eyes to this great opportunity, Rusty.
Thank you.
Are you curious about harnessing your super for property investment? Propel your future with the enlightening online seminar, The Ultimate Masterclass to Self-Managed Super Fund Property Mastery. Reserve your spot now at getrare.com.au/SMSF. Spearheaded by Rasti from independent buyers agency Get Rare Properties, this masterclass unravels strategic property investment using your self-managed superannuation fund. It's not just about learning. It's about transforming your financial future through education. So embrace this opportunity to enrich your investing acumen. Enroll now in the free masterclass and begin a journey that marries insight with action, leading to a financially empowered tomorrow.
Unlock bonus content now as a premium subscriber.
And that brings us to the end of this week's show. Make sure that you don't miss a single episode of Realty Talk or Bushy's Get Invested podcast, both delivered to you every week, and you can do that by subscribing to the Property Hub now on your favourite podcast player or wherever you are listening to or watching the show. Also, join the conversation anytime on Facebook at the Property Hub Collective. I want to say a big thanks to our supporters and content partners, Realty.com.au, BMT Tax Depreciation, Know How Property Finance, Get Rare Property, and Apiro Marketing. I'm Kevin Turner, and on behalf of Bushy and the Property Hub team, we look forward to seeing you again next week.